Welcome back. Indiqube Spaces is in focus after reporting the Q2 numbers. The top line for the company has gone up by 38%. The EBITDA has gone up by 74% on a year-on-year basis. Rishi Das, co-founder and CEO at Indiqube Spaces, is now joining in. Rishi, great to have you. This is Rima here. Strong performance in the first half of the year. As we said, 38% in Q2, but in H1, it's a 33% top-line growth and adjusted margins are at about 21%. Can you sustain a 30% plus revenue growth for the full year and maintain margins at 21%?
Yeah, thank you, Rima, first of all. Yeah, I think, it's very sustainable. That's what we are seeing, that we have some good wins in the quarter. The basis that we are quite confident that if you look at the current quarter, which is going on the Q3 as well as Q4, we should be able to sustain the revenue growth and defend the EBITDA margin as well.
Okay.
Rishi, good morning. Thank you for joining in. Now, same about the occupancy levels as well. At 87%, you sustain that in the second half, or you see an increase in the occupancy levels?
Occupancy level will hover around a similar range. There could be some fluctuations because, as you can imagine, when we add properties, any new properties get added in a quarter, there is a slight blip. But what we have seen historically is that at a portfolio level, we have always been between 80 and 85%. And if you look at our steady state centers, which are more than 12 months old, we have been between 85 and 90%. So that's the guidance that we have internally. And there could be some fluctuations here there, but it will be range bound.
Rishi, your AUM increased by 1.3 million square feet to 9.14 million square feet, and the seat capacity went up by 30,000. What is the guidance on seat capacity and AUM for the second half of the year? Where will you end FY26? And any indications for what FY27 might look like on these two?
So we have been adding, Rima, anywhere from about 100,000 square feet to about 125,000 square feet monthly. That has been our addition, and that trend has been fairly consistent. And we are very hopeful that we'll be able to sustain that. And if you translate in terms of seats, it comes down to about 2,500 seats. Typically, every month, we should be able to continue adding. And we have a good headroom for growth. If you see, our AUM is 9.1 million, and out of which about 5.8 million is what is giving us the rent yielding. So we have almost close to 3 million square feet, 3.1 million square feet of space that is available to us. So that gives us a good headroom for growth. And we will be, in terms of growth, range bound between 30-35%. And we are quite hopeful with the kind of supply pipeline we have, we should be able to sustain that, yeah. Similar numbers should be there for FY27 as well.
Rishi had also highlighted that you have plans of doing capex worth over 460 crores in the over the next 3 years. How much of it is done in the first half? How much do you expect to do in the second half? If you could share a breakup of the numbers over the next 3 years.
So in terms of capital expenditure, most of our capital expenditure gets done on adding the interiors for our offices. And typically, if you look at like the H1, we would have added close to 100 crores worth of 120 crores worth of capex that we would have done to add more seats on a net basis. However, there are some past payments, future buildings that we sign up for which we have to pay advances and all of that. But purely in terms of interior capex, it would be about 120, 130 crores that we would have spent in H1. And we see a similar outgo in H2.
Sorry, go ahead.
Yeah, and what we have budgeted the 3 year, we are very hopeful that this money should last longer with us because we have very strong cash flows. Typically, our cash flows have been almost like 150 crores in the H1. So that should be providing us a lot of accrual-based capex opportunity as well.
Rishi, I remember the conversation we did around the time of listing, and we spent some time discussing the contribution of value-added services. And that number was going up. And if I recollect, when we spoke, it was about 12.5%, 13%.
Yeah.
What does it stand at right now, and how are you looking to increase it? I mean, do we have a target in mind?
Yes. So if you look at Rima, a year back, from there on, it was 11%. Now we are at 13%. So there has been a 2% growth. And as you can imagine, when we have grown by 33, 34%, on an overall revenue basis, growth from 11 to 13% is a good growth. We are quite confident that this number will start touching 15% in next year. And why we are so confident is because we are finding that when customers are coming to us, they are buying more and more B2B and B2C services like food, transport, IT infrastructure, green power, the like. And also they are giving us the opportunity to serve their other centers, which are beyond Indiqube centers. So for example, if they have taken space in a couple of offices with Indiqube, and if they have 5 more setups, the other 5 setups also they want us to make them Indiqube managed, where they expect us to provide services. So that number we are quite hopeful that will continue on our upside. And for next year, we see this number reaching close to 15%.
Rishi, is there a supply constraint in the market currently? Because a lot has been said about commercial real estate in comparison to the residential bit. But in case there is a supply constraint, which geographies are facing this, and what's the situation right now?
So definitely, you are so right on that. The absorption has been very, very sharp. Typically, like in the 9-month period, calendar year, India has absorbed close to 60 million square feet of space, and this compares very well with the last year numbers. And just the quarter, the Q3 calendar year, absorption has been close to 20 million square feet. So there is a supply crunch building up. Cities like Mumbai are facing quite an extreme supply crunch. In certain pockets in Bangalore, we are seeing the supply crunch coming in. But as I said earlier, that we have a good headroom of almost 3.2, 3.3 million square feet of area which we have signed up and yet to become rent yielding. So that should ensure that in the short to medium run, we have enough supply. We are signing up new buildings. Plus, another distinguishing factor with us has been we have done a large amount of renovation. If you see, close to 3 million square feet of office space in our portfolio is renovated buildings. These buildings are which were done, say, 30 to 50 years back. For example, if you see today in Nariman Point kind of location, with the C-Link coming in and metro getting started in some time, you will see a lot of revival in Nariman Point kind of area of older properties. So we are seeing the same kind of revival happening in many Indian large cities like Bangalore, NCR and all of that. So since we have been an early mover in picking up the older buildings and renovating them, we see a large part of our supply should come from the existing stock. We are not completely dependent upon the new stock coming in. And to give you another idea, India has about 1 billion square feet of real estate, and 500 million real estate is more than 10 years old. So there is a massive opportunity to also tap into that pool of supply.
Rishi, thank you for sparing time and joining us today. Wish you good luck for the second half of the year as well.